I believe that we can own the 21st century market again by moving to electric vehicles.
Regardless of your opinion about Joe Biden's administration, whether you're for it or not, it is no doubt that Joe Biden is in support of the electrification of our nation. The United States, after all, is actually well behind China when it comes to electric vehicles, as well as in Europe, and we are in tremendous dire need of a new reform. Now, in this channel, we're not political whatsoever, we don't pick any sides, and in this video, I'm just focusing on the massive news that are coming for electrification on the United States, as well as, you guessed it, more Tesla news, because obviously there's always something going on with Tesla, including news of the demand in Tesla in Norway, Goldman Sachs 20% upside of Tesla's target from today's numbers, more Tesla news regarding the Gigafactory in Shanghai in China, as well as news that Tesla is now adding enhanced autopilot in Europe. And for those who are new to the channel and you're watching it for the first time, if you happen to like this video, consider subscribing to Electric Invest and hit the notification bell so you don't miss the next video. And without further ado, let's begin. So very recently, the Senate Majority Leader Chuck Schumer is making the call to replace all of the United States gas cars into electric cars. And this comes at a time in which the pandemic bill was just signed very recently by Joe Biden, and this bill included a $1.9 trillion relief, and in it, Joe Biden has also expressed his plans of accelerating the EV infrastructure, the charging infrastructure in the United States, with over 500,000 charging stations, as well as replacing many government-owned vehicles into electric versions of it. But now, as part of the package, Schumer wants to include this proposal, and specifically to make it even more of a no-brainer for people to say, hey, I'm gonna get a better deal if I just simply switch. In an interview earlier this week, they also added that the goal is to make all of the cars in the United States to be electrified by 2030, as well as every single car on the road by 2040. Pretty much an entire totalitarian of electrification. And when we take into account that China actually has a policy that they want most of all vehicles sold in China to be electric by 2035, we can see that these plans are extremely ambitious and are in complete competition with the already accelerated and very committed Chinese government when it comes to the electrification of their vehicles. And it could potentially put the United States back on track on a brand new emerging technology that's definitely going to be part of all of our future, regardless of which country you're on. This will also be a sharp contrast to the European Commissions, which have unveiled on December of 2020 that their strategy for mobility to reduce carbon footprint is a lot less ambitious, claiming that they only hope to have at least 30 million electric vehicles by 2030. So definitely a lot more conservative, but nonetheless still a good move towards the EV future. So this is pretty huge because obviously we already know that Tesla is the largest EV maker as well as in the world. There are other competitors as well, obviously, that are ramping up, especially Volkswagen, but Tesla is definitely going to be one of those biggest beneficiaries of this bill. But let's take a little bit deeper dive into the details about this bill. It says over here that the top line details of the cash clusters style plan haven't changed much since Schumer first proposed this bill in the New York Times in late 2019. But the optional landscape changed. And they say that anyone who makes a trade from their gas car to an electric car is going to get a substantial point of sale discount. So this is not going to be like the proposed $7,500 tax credit that Joe Biden ended up signing not that long ago. What Schumer is actually pointing out right now is that this will be a point of sale. So it's totally different. It will mean that when you buy a Tesla or any other EV car in the United States, you'll be able to have, according to him, a substantial amount at point of sale, so right away as soon as you buy it. And according to Schumer, he wouldn't say how much the discount would be, but only that it would be deep. And according to a spokesperson, later confirmed that are even more generous than the $7,500 federal credit EV tax from Biden. So this essentially means that it could be larger, like the previous bill suggested. So it is very, very exciting news because it is a tremendously huge, massive plan for electrification. I am one of those people who would definitely benefit from that because I am in the market of buying an electric vehicle, and obviously electric vehicles still demand a little higher price tag than the competitors in the gas side. And this is something that I'm personally invested on. I want to know what's going to happen. Now, there are still details to be worked out about this bill specifically, like for example, how much money to give each person. It is stated that it is going to be more geared towards lower income people, specifically so that way they can get the most discounts. Now, given this, Schumer believes that Joe Biden is going to definitely go ahead and favor this into his new plan for the electrification for America. Now, although Tesla is definitely going to benefit tremendously about this new electrification plan if it goes into fruition, there has been some criticisms already, including Elon Musk, that has even said that it is smarter to collect higher taxes on regular conventional ICE vehicles rather than just basically give discounts and tax incentives. And it is quite a good point, because this is one of the reasons why places like in Norway has succeeded, due to the fact that they make it more favorable for companies to just go electric. Rather than giving people money, they just make it harder for regular ICE car companies by taxing them heavier, so that way they're forced to just literally sell their EV alternatives. Now, speaking about Norway specifically, we need to talk about the fact that right now we have a brand new report from Norway in which we see that Tesla takes the lead in Norway's EV sales in the first quarter of 2021. And now look at this graph right now. We can see the explosive growth from Tesla in the first quarter of this year compared to their competitors such as Audi, Volvo, Nissan, and Polestar, which just shows that Tesla continues to actively capture the automotive market in Norway. You know, the market share continues to increase, and despite the competition increasing, Tesla maintains a lead position in the first quarterly sales of 2021 in Norway. And according to this data, as of March 17th, Tesla has registered 1,689 vehicles since January of 2021, overpassing Audi, which ended up having 1,621 registrations. And this demand is just going to continue to increase. You know, we already have the Giga Berlin factory that is going to be the designated factory for all of Europe, and it is just going to further incentivize the demand now that the vehicles are available. And as a matter of fact, we also heard the news that Giga Berlin is actually started hiring positions already from multiple categories, ranging from senior construction project manager all the way up to data engineering specialist to manufacturing engineer, from the press, stamping. And it is just another sign that we're so close to Giga Berlin opening, which is going to continue to further incentivize the demand in Europe, and Norway is just the beginning. And right now in other news, we also see that Goldman Sachs has actually said that Tesla still has 20% upside. Now, this came in yesterday, and we saw over here in a report from Tasmanian here that Goldman Sachs has pushed their out of consensus stock picks, which are companies that are definitely crushing it right now, and one of those companies ended up being Tesla. And we see over here that the Deep Mitha, a vice president for Goldman Sachs, said that he and his team were looking for stocks that, judging by their research, might be a reliable choice, but unloved by the market. And as you can see, they give Tesla a 20% upside to their target, which is $880 per share. And the average consensus for Tesla right now, with the highest on the street being $1,200, medium average $641.12, and the lowest $67, which literally just comes from one analyst, which is, you know, the clown and buffoon Gordon Genius Johnson. But personally, in my opinion, as well as many analysts on Wall Street, you know, from Dan Ives, Gene Monster, Kathy Wood from ARK Invest, Tesla is still much undervalued, and $800 a share would still be considered a buy to all of us who understand the tremendous upside of Tesla's business, you know, not just from the electric car side, but also from the solar business that is also ramping up, as well as the autonomous future. But even if you ignore all of that, the Tesla energy side and the Tesla vehicle side, and the fact that Tesla is going to be ramping up from the Gigafactory in Berlin and the Gigafactory in Texas, we're expecting numbers that are going to be closer to doubling from 2020's numbers to closer to the 1 million vehicle deliveries. It is no surprise why Tesla still has a buy rating.
The analysts following this stock don't know how to analyze it.
Now, these videos are for entertainment and reporting purposes. It is not an endorsement to buy Tesla, even though I personally have over 90% of my portfolio just in Tesla. I am just basically pointing out to the fact that there's a lot of reasons why Tesla is going to continue to have tremendous upside. There's gonna be a lot of news out there talking about Tesla, you know, giving you guys negativity about it. But at the end of the day, as an investor, it all comes down to your research, your ability to understand, and your conviction in this company, and whether or not you see the upside for the next 5 to 10 years.
We just published a report with our, again, long-term forecast. And The numbers have gone up dramatically, and yet, we think it's incredibly undervalued.
And in other news, we see here that Tesla has added enhanced autopilot for owners in Europe through the end of March. And this is surprising because the laws in Europe are a lot more strict. But as of right now, they're having that option for the autopilot. Now, this is not to confuse it with the full self-driving or FSD beta, which is a completely different side of the software. This is just the entry level that comes standard with every Tesla, which includes auto parking, navigate on autopilot, lane changes, and so on features. And in this report, we see that Tesla car owners from a number of European countries, such as Germany, the UK, and Norway, have begun reporting that the enhanced autopilot has appeared in their vehicles, and according to specified information, the additional function expires on March 31st. This is going to be important because it is going to also help a little bit on Tesla acquiring a little more data when it comes to enhancing the software. And Cathie Wood has said many times that this is one of the secret sauces that Tesla has when it comes to having the ability to obtain the most data out there from any competition, and one of the biggest reasons why Cathie Wood from ARK Invest has given Tesla such a high valuation concentrated on its autonomous driving software. And before we go, I want to talk a little bit about Tesla in China, in which Tesla owners in China may soon have the opportunity to personally witness their new vehicles being produced. Basically, they'll have the ability to take tours all around the factory and be able to see their Teslas being built in real time, which is actually something very, very cool and neat. We see here in this report from Teslarati that the Tesla executive comments were shared in a post on Weibo, while reporting that Tesla enthusiasts who asked about the possibility of owners being toured around the massive electric vehicle production complex, Tao remarked that the plans for such a program are already in motion, saying that we will have it being planned now, she wrote. So this facility is so automated that it's just full of machinery, and it is just a tremendous sight to see. But I would like to know your opinions about the new plan that is coming for the United States. Specifically, do you think that this plan is going to go into place and it's going to be very significant for Tesla? Or do you think that Tesla is okay and fine and it doesn't need any incentives to continue selling cars in the United States? What about Tesla's demand and Goldman Sachs' opinions about Tesla stock? Do you think that they're a little bit conservative? I personally think that they are, but I would like to know your opinions down in the comment section below. If you have watched up until this point but you haven't subscribed, consider subscribing to Electric Invest and hit the notification bell so you don't miss the next video. I'll see you guys in the comments and in the next video.